Welcome to the Twomey Stock Market Report. I'm James Twomey, and today is May 12th, 2022, Thursday. Today's report will be a little bit shorter. Thank you. Thank God for the last one. We really got down in the weeds, but I want to just give you some highlights about what we saw and what we talked about yesterday using the Twomey Technical Indicators and the Twomey investment process to see how we're faring. And remember, I had said yesterday, I said, typically in bear markets in the morning, they rise, or the stock market is more positive, and then by noon it starts to fade, and then at the end of the day, it's a sell-off. And especially people who are trading on a short-term basis, they're in it, and they're in and out, and of course they're riding those particular fluctuations. If the market tends to gain steam towards the end of the day, that often is telling us some potential inflection point, and it's generally a better sign because people are buying and holding overnight. And what do I mean by that? Especially short-term traders. I'm sure if you've traded a stock and you go to bed and it's doing great, and then some kind of news comes up, and overnight the futures are trading, and you wake up, it's 20% down. You haven't even had your first cup of coffee. So for people to buy and hold stocks overnight, that's a pretty good sign. And that's what happened today. But also, in addition to that, tomorrow's Friday. All these short-term folks, a lot of them don't want to hold into the weekend. So interesting. We'll see where it goes. We'll go over a couple of things we talked about yesterday, and we'll certainly take it from there. Newsflash. I was reading yesterday or today. This gal Diane Swank, is a respected macroeconomics. You know how we say what's in macroeconomics, what's going on in the big picture. That's part of our Twomey investment process. Well, she has a lot of inner working knowledge of Main Street as well as Wall Street. She's an expert in economics of labor market, monetary policy, etc. You Google her. Very interesting person, has been around some time, and she was saying that she estimates unemployment rate must rise above 5% for inflation to cool to the Fed's target of 2.5%. Friday, the Department of Labor, the jobless rate was unchanged at 3.6% in April. And yesterday's Newsflash on our show, we talked a little bit about how these high tech companies are now pulling in their horns. Amazon overhired in the warehouse. We saw Uber is going to stop hiring. We noticed Robinhood is laying people off. What was the other big company? Meta or Facebook. Is head overhired, et cetera, et cetera. We need this to develop. We have to see where it goes. But as I've said before, if companies start pulling in their horns, if due to inflation, and if they ever get to the point where they start laying off people, that is a real impact to the economy. The economy is really impacting us to get to that point too, and then also obviously the stock market, real estate market, etc. So keep this in mind. It's one thought process, but over the days, weeks, and months, are we hearing more similar chatter? I'm just starting to hear when I listen to financial shows, what's on TV and what I'm reading on the web. All of a sudden, everybody's talking about, oh, the market's catastrophic. There's no bottom. Everybody's selling. And we've certainly seen that where good stocks are getting sold as well as bad stocks. So I'm going to take a step back from that before we go into the individual stocks. And I want to talk a little bit about how do I look at where to invest, right? We have the principles, right, that we've been chatting about, but I look at the market sector and I break it down into energy, utilities, materials, healthcare, financials. You can see the list: real estate, communication, information technology. And I look at those over time where everything is going. As you can certainly see, I've got a 5-day, 20-day, 1 month, 6 months. So let's just look at the last 6 months. Energy up 25%. What's the lowest one here? I don't know if it's cascading. Consumer direct discretionary. IT 23%, 28% here. Let's see, what was up? The next highest one was utilities, that was 0.3. So there's really, this year, everything's been down. And of course, we've looked at our market trend. We went back to January of this year, and the Dow and the NASDAQ and the SPY and the Russell, everything has been down. In the last 7 days, straight down. Okay. What goes straight down must generally go straight up. So I look at this, and let's say I'm thinking going long. Let's just talk about taking a long position. Obviously, this is telling you to take a short position, especially in the technology sector. That is, what I was kind of interested in is real estate was down 14%, but I think part of that is the real estate investment trusts that are out there. But anyways, let's say the opposite. We're looking at the market's in good shape, or things are moving. I will take a look at this. I'll look at what's happening the short term, 1 month and 6 month, and I find a sector that seems to be showing considerable growth, right? Then what I'll do is look for an electronic traded fund, ETF, whether it's Schwab, they have their own, or whether it's one that's Ridex. There's a lot of them out there. I'll Google that area, and then in that ETF, they'll give you, if you look at, and I'll show you one of these times. I just can't do it right here today. My time's limited. But with that said, the ETF, you can look it up, and it says that on Yahoo, I think you can do that. But it shows the top 10 holdings, so the top, the major holdings. From that, you could decide, do I want to invest in, it might be Alphabet or Google or whatever, or Tesla or whatever it may be, and you say, okay, so I can pick individual stocks. You can use the Twomey investment process, or stochastic, relative strength index, MACD, and our 10 and 15 EMAs on the stock chart itself. So you say this. So that's the type of things. And of course, do I want to chase things that are going up? Yes. Do I want to get in the beginning? Yes. Am I going to look at things? And that's what I'm going to discuss next. Am I at the top? Do I take a position or not? And, I don't know. That's a decision you have to make. But that's where I start. I don't start with the news shows on TV, and the guy at the end of the segment, he'll say, all right, we're going to go through our panel, and what are you trading tomorrow? I've said this 1,000 times, and some of these guys I really respect, and I do try to hear them out. Are they selling while they're touting things? Probably not these guys on CNBC or these panels that you see on Bloomberg, because they're showing up every day and their reputation's at stake. So, but I'm sometimes I'll pick the stock, sometimes I won't. But this is where I start. I get the sector. I see what's up, what's down. I look into that ETF. I'll do it. I search Google, whatever. I go through Schwab first because they have their own sometimes, and it's sometimes I like what they offer. I look inside it. I see particular stocks. Then I generally will start with the ETF. Or maybe it's like for example, technology. I'll start with the NASDAQ, right? QQQs, the short of the QQQs, PSQ, the 2Xs I trade mostly. QID is the short, QLD is the long. Same thing for the SPY, same thing for the Dow, same thing for NASDAQ. The small caps. So I generally will start in a macro. I call that the bigger pool, and then I might go into more of a deeper sector pool, and then I may even, depending how once I've got a feel for that sector is moving up, down, sideways, then I might try to pick the top stocks and and make an analysis on those top stocks, and I might go after that. Okay. Enough on that, and we'll come back to that. But I want you to start in your mind how you're going to start picking sectors and then individual stocks, or ETFs or just maybe the NASDAQ or SPY. That's how I do it. I keep an eye on that on a daily basis, quite frankly, this chart. Twomey investing process, we've been through that to general market trend, economic conditions, environmental factors. Some of these environmental factors are changing every day. We start becoming a reactive trader if we focus on those. We don't want to be a reactive trader. Bias creation, yes, we're going to develop a bias. And, I'm going to talk about one here today as well. And then we put that in a blender and come up with our short-term trading philosophy, if you will. We already talked about the CPI. So what do we use? The relative strength index, the stochastic, the MACD. You may want to take a screenshot of that and then Google those for more of a deeper definition, or look at some of our previous segments, which we went into deep dive on that. Let's see. All right, so we're going to go into the stocks next. Let's pick up. All right, SPY. We know that's been going down, right? This is the S&P. Remember we were saying that 1, 2, 3, 4, 5, 6, 7. The last 6 days, parabolic down. Our next support is, inflection point is way down here between 379, 370. It's easier to do it on a weekly. Just here it is way down here. That's kind of a short inflection point. And then if it continues to go down, there's a couple of stops along the way, and then the next big one is down here. Will it go that way? I don't know. This is the weekly. It's been 1, 2, 3, 4, 5, 6 weeks down. You start getting into that 5 to 7 in a row. You'll see a change. Why? I don't know. It just seems to be the cadence and sequence. Here we saw 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So I just proved myself wrong. But this week there was a kind of down phase. And then we come over here, 1, 2, 3, 4, 5, and then it starts coming down. So there is some cadence out there. You want to be aware of it. There's a lot of pattern recognition out there. We could talk about it at some point. Keep in mind the SPY, right? This is the S&P. What do we talk about? This is the weekly relative strength index. What is it today? It's 31 on the weekly. 30s are oversold, beacon. If it, a lot of times it never gets to that low. Things rebound, but that's telling us everybody in the world is looking at this market as oversold. If I'm not the only guy looking at that technical indicator, and I'm sure there's much more sophisticated programs. Again, this is the basement tapes. We're sitting around the kitchen table. We're chatting up stocks. We're trying to develop a philosophy that we can trade off and make money. We're not paying this, $100 a month, $200, $1,000 a month for some guy to send us an email or a flashy video, and come to find out the guy's wrong. This, we've got a system. It works. Is it always perfect? We'll see. And I'm going to show you a few examples. But anyways, with that said, everybody's looking for this market to bounce. If you Fibonacci, again, I'm not the best Fibonacci guy out there, but if I go from the low back here and we go up to here and we Fibonacci, it's at 0.382. First area usually a bounce is 0.23. Sure it did. It bounced 0.382. Yeah, you might get a bounce, right? Anyways, be prepared. The market may shift. So let's take a look. The short of inverse on that 1-to-1 is SH. I usually trade the doubles. Now, when you're new to trading, or you're new to the Twomey Stock Market Report, this is really busy. Wow. There's a lot of noise here. Okay. I think what I'm going to do real quick, relative strength index. That looks a little heavy. All right, let's lighten that up. All right. So what do we got here? It's almost too late. Do we take a position? It's at the height. The relative strength on the weekly was very, very oversold. That means potential bounce, especially when it's down near 30, right? Relative strength index today, 67.95. Overbought. overbought, oversold. This is the inverse. So this is the short of the SPY. That was on the weekly. Let's just do apples and orange. What is it in the weekly? So far, the week's one more day, 67.7. 70 is our overbought. The SPY, overbought. The SPY, the weekly, near the oversold indicator. Whether it's 67 or 70 or 33 and 30, I'm pretty much telling you it's overbought and oversold. So would you go in here? Actually, I'm trading at 2X's, but today, just so we could have an example, I took a position. When the market was up, I jumped in. I bought the short version. Also, I looked at 1-to-1 from the last low to the last high, and then I go from this high to this high. We're pretty much we've kind of, it doesn't happen all the time, but we've done that 1-to-1 extension just about. I think it's telling us we probably are overbought in the short side of it, and there may be a reversal, but time will tell. And if I look today, volume-wise, a lot of selling, right? Let's see, what about the SPY itself, SPY on the daily? Was there a lot of buying? Yeah, it's quite a bit. So maybe, I don't know. I think tomorrow being a Friday, we might. I'm not a reactive trader, but if you took a position today or yesterday, you're going to say, put a tight stop, right? Let's not fool around. I would bring it right, depending on where you got in. I got in at 16 or 15.9 or whatever it was. Yeah, let's call it 16. Do I put my stop at 15? We may wake up and it'll be at 15.9. I'd put my stop down here probably at 15.7. And you may wake up and it's already down there. And you want to get out, go ahead. It's going to be hard for a Friday to go and close positive unless there's some really good news out there. Will it be? I don't know. But I don't want to be a reactive trader. What I'm trying to say is we're kind of at these inflection points. I'd be patient. I wouldn't necessarily go in there. If you are in there, it's a good point to be ready to sell, right? What does our short-term indicator say? 60 minutes. And this is the short. Remember, we're on the short side. Fast oscillator, up, down, a lot of changes, short period of time. It's still up here in the 70, 80 area. Well, actually, it's lower than that. Yeah, it's up there pretty high, 84. Our slower MACD oscillator, green has gone over red. The green's coming down towards the red, but it's still up there in positive territory. What about our 10 and 9 EMA? Well, our stock closed below our 10 EMA, the black line. It's near, but it's resting above the 15 EMI. It's getting close to saying it's weak, but we still got a positive divergent there. It's a little bit, these are longer term indicators, and that's why if you're trading right here to get in because the market's short, it looks short, just be prepared to get stopped out, okay? And if it runs up, hey, it was the right decision. But it's a little risky is what I'm trying to say. I think the other one was PSQ, which is the short of the NASDAQ. We just run through these quickly. It's had, almost 7 highs without really major pullbacks. It had, 1, 2, 3 kind of low inflection points. I don't know if you want to call this one the fourth. Again, we're in that 5 to 7 range, 5 to 9 range where these inflection points start predicting. We kind of have a 1-to-1 here as far as extension from this low to this low. Did I put it in? That's more of a trend line, but let's use it. I'm going to copy that. And I'm going to go here. Oops. And it's not going to let me do it. But it's close. As you can see, it's close to 1-to-1. All right. I'm going to get it out of there for now, but it's close to 1-to-1. So what am I saying? Today, for the sake of argument, I also took a position at the low, when the market was up, and I got in at the 14.0 something, 14.01, 14.02, and just want to see where it's going to go, because I'm saying I'm giving this advice out there. If somebody's watching this, if they got a personality like mine, they're aggressive, they want to get in and give it a shot. So I'm going to help watch it with you. If you did put in there, you got to get your stop. You got to give it some room to run. It was way above the 10 EMA, but I would, use that as my first stop. 10 EMA, which is 13 point. I can't even see 13.5. Right. So that's where you want to go in. What's our short-term indicator? Our short-term indicator, we're still that flopping around negative 60 minutes. This same thing as the SPY. It looks like it's going to touch here or maybe go down. We're still positive up here in the indicator, but our stock is resting there on the 10 EMA. The 120 minute, what's that telling us? Still positive divergence. This one is negative. This one is tight, but we haven't seen any activity, and this is still way above. So if the market tanks, we're in. Not bad. We'll ride it, but you got to be careful. And of course, the Nasdaq is the weakest index, and that's the one that's getting hammered the most. Look at a lot of this red bar. A lot of selling today. That tells me people are saying what we have been saying. Markets overbought or oversold. What's the relative strength index on the daily? It's 67. So it's basically 70. What about in the weekly? It's 69.64. Let's just take a look at the QQQs. And this on Schwab, this for some reason is a big delay. Anyways, that relative strength index, 29.2, well below. What's our next? And this is one look at it straight down. And we've got our 1-to-1 extension from last low, and then the bump up and the come down. We're pretty much 1-to-1. If it breaks, what's the next stopping point? 267, maybe the Fibonacci 0.618, 258. We're below the Fibonacci of 50, well, right at it. So everything's pointing towards a bounce. So I took a position on the PSQ, assuming I was new to the Twomey market report, and I want to see how it goes, and I'm aggressive, and I'm thinking I'm going to jump in. Just put your stop really tight there, and don't hang around, right? That's why we use these technical indicators. It does take time for the 10 EMA to cross below the 14 EMA, and I'm going to show you an example now. If you've been long for a while and you got profits, and it starts resting on that 14 EMA for a couple of days, no problem. Take some profits. And I wish things moved that slow, but in the volatile market like we're in, you could wake up and the market could be up 500 points. That's how reactive it gets. And I talk to you, if these short sellers get into they call it a short squeeze. I heard them talking about on, what the heck was it? Was it CNBC or Fox Business? But they were explaining the short squeeze. So when all this stuff starts hitting the news, it's almost too late. I had somebody come to me today, and they said, "Hey, I saw on TikTok that the technology companies are holding back on hiring." Well, we talked about it on Newsflash the other day. It's getting out in the mainstream, and if TikTok's talking about it, some person on TikTok, hey, and everybody says go out and buy Bitcoin. It's at 66. It's now trading at 28. Oftentimes when the person that never invests, never talks about the stock market, pulls you over in Thanksgiving and says, "Hey, buy Bitcoin. It's the best thing you could do. Look at where it is." That's the first thing I do. Go home is if anything associated with it, I sell it, because that tells me when it gets to the mainstream kitchen table, the horse is out of the barn. Okay, with that, TBT. TBT is the double of the 20-year bond, the Treasury bonds yields as interest rate increases out there. The Fed goes from 0.75 to 0.15, the 0.2. Banks raise to raise money, they sell a bond, they raise the yield. So instead of it paying you 1%, they're going to pay you 1.5%. When that happens, the TBT goes up. The opposite happens if they lower rates. Okay, so TBT, I had major profits. I got out. Why? Because it was, I told you I had this drop. Even though we did not see the inflection point here. It's a two-timer. I don't hang around a lot. It had used the 9 EMA, had a big drop to the 10 EMA, just like here last time. But once it crossed below, I was like, boom. I got a very small point so I can watch it on my stock ticker screen. But now the 14 EMA now is closed below it, the 15 EMA, right? Our technical indicators, fast, negative. Our slower, negative. This is the daily chart now. And here we are with our, we're getting very close to this, either flattening out or crossing. Will it? I don't know. It's time will tell, right? Time will tell. Let's look at the short indicators. 60-minute, negative. No, it moved up positive. Maybe it's going to bounce. Again, we can stay in a trade longer on the daily until if we don't see all our three things kick off. Way down here, the slower, it's down at the bottom. It's still negative. Up here, our other indicator, it's still negative. This is a 60-minute chart. But, we're seeing some action down here. Let's go to the 120, a little bit longer segment. Is that showing us any variation? Well, the slow one, the fast oscillator, yeah, that's positive. Makes sense, right? Because not the 60 minutes to 120 minutes. The slower one, still negative divergence down here, way at the bottom. I go up here and we're still negative on. So all our three indicators here are saying, not a good. It's not going in the right direction. Go to the daily. We're back to the daily. We'll see how this goes. Maybe time. And if you don't want to trade to two timers, it's TBF, right? And the same story there. In the meantime, what's SCHP is Schwab's Treasury protected inflation protection bonds. The Fed and everybody, they have these with the Fed. You can buy inflation protected bonds. They call them Treasury tips, believe it or not. And they're not Twomey investment principles processes, but it's Treasury investment protected. I'm not really sure. I have to look that up, but it's inflation. Yeah, Treasury inflation protected bonds. In other words, you buy this bond. If the inflation kicks in, and obviously the yields are going up, they give you a little bit of a kicker to keep you buying them. So, suppose if you hold these, I don't know if they're 10 or 20 years, I forget, but but all during this time, when the yield's been rising, and here we are back in our January time frame where I was getting into TBF, down. Yeah, there's a little bump here, down. So I'm saying to myself, what's going on? Is this changing? I look at our technicals. Yeah, there's some positive. This is the daily now. Still negative here, but it's hard to see. Let me see if I can make this bigger. Well, anyways, behind this histogram here, the red and the green are getting near, but it's down at the bottom, right? What's going on up here? Well, not much. Not much. This is our daily chart, right? Our 15 EMA is still well above the 10. Our stock is using the 10 EMA as resistance. Am I saying because the other, the inverse of this is not performing or going up, should you jump in here? It's too early. Just like our shorting of the oil example, it was too early. Let's look at the shorter time frame. Well, it was positive and then it jumped down negative. It turned positive in our MACD, and it looks like it's trying to turn negative here. What do we got here? We got a positive here on the the EMAs. So that's saying, but on the 60-minute chart, there's some positive. The 120, positive, negative, positive on the slower time frame. Up here, the 10 EMA crossed the 15. Do I trade the 120? If I used to a lot, I don't do it much now. I'm out in the golf course too much. I don't want to be on my phone while I'm trying to, play golf. You could buy it just because of this positive indicator, but the stock is really bouncing around right now. It's come back down to these 10 and 15 EMA. It's close. It's close. Look at our relative straight index as a backup. It's 43. I don't know. That's not telling us. It's Midland. It's not telling us much. How about the relative the strength index here? It's 36. 30s are oversold. It had gotten down to 29. Maybe. I mean, if a lot of traders are saying there's going to be a bounce. Well, a bounce, we talked about it with Verizon, the dead bounce, right? It could happen. I'm not ready to jump in there yet, but I'm looking at it. I don't think yields are going to stabilize here all of a sudden. I still think they need to come up. I still think interest rate has to get up. I saw Powell got part of the noise that's out there. Powell did get approved for the second another term. Maybe he can be a little bit more aggressive. My personality, if I was the Fed, I would raise tomorrow, at least a quarter of a point. Is it putting shockwaves into the market? Yeah, but inflation is it's not curbing, right? Verizon, we talked about our dead bounce, right? Well, it's starting to go sideways. That's turned positive, pretty good. This is our daily chart now. These are good examples. I'm not saying this is what you should trade. It hasn't turned positive there yet. We certainly aren't positive there yet. Short term, before I come back to that real quick, short term, positive, negative, negative. That's 60. 120-minute chart, positive. There's a tie to the positive and negative. I can't even see that. The 14 is still above the 10. The 15 is still above the 10. So we haven't had any short-term indicators. Things are changing. However, go back to my other segments on Verizon, I don't want to repeat here, but if it goes sideways, we've got the annual dividend is 5.5, 5.3. That fluctuates as the price of the stock. The higher the stock goes, the dividend yield will come down. The lower it goes down, the dividend actually goes up. It's kind of like bonds, gives you a popsicle headache. Net of it is, I don't have a problem if this goes sideways because I bought down here at the bottom. I don't really care, right? Because if it does, and it's well below our 50 and our 200, we talked about that ad nauseum. Because if I get 5.5%, well, I haven't been in it all year. If I get half of that for the year, I get 3%. I'll take it. If the market keeps going the way it is, and I think my personality is saying we're in a bear market. When we see things down at, I think the S&P almost hit 20%. We talked about that's the bear market territory. We know the Nasdaq's at 30 and the small caps at 30 from the highs of. I don't. Just like inflation doesn't start overnight, it doesn't go away overnight. Bear markets don't disappear overnight. You have bear market rallies, and you can make some good money. And we're gonna, we'll see that. We'll trade it. All right. I don't want to spend a lot of time on a lot of stuff here because I've been really. We've been going over this, and it gets repetitive. But future segments, I'm going to try to get one out this weekend. We'll talk. Let's look at these sectors a little bit. I think the energy sector, we're on the precipice there. I've been watching it. I'm back into the UNG. I think it's even the futures of that. I just looked at it tonight are still up over above where it closed. So we may want, you may want to look at that and take a small position there. I've watched the XLE, and the oil sector, OIH, both those are, I'm not yet sold on those because our technical indicators are there. I'm okay if I miss some of the ride up until I get confirmation. It's a lot better than being stopped out 3, 4, 5 times. Look at Tesla. I don't know where the heck it is today, but I was, I know my kids, I keep bringing it, my kids were saying, oh, I want to hold it. I want to hold it. Well, I had stops in there. I bought it again. I had another stop in there. I think it was down in the 600s here. There's no sense losing money every day, right? So we'll look at some of these. Healthcare is one of my favorite ones, just for the simple fact it's a steady eddy, just like utilities. So utilities are up there. We looked at XLU. We'll look at some others. Healthcare, we'll look at those. Consumer staples. I'll show you a couple of ETFs that's probably better than selling that. Materials, gold's been in a tailspin. That might be getting near a bounce. I don't know. Silver in a tailspin might be getting a bounce. The dollar. I trade the UUP. I think I told you I've had buys in this for months, and I just haven't jumped in. And I'm sorry I didn't, because look at it. I've had buys, and I just and then I don't pay attention to it because it's not something I usually trade. When my portfolio, I've said this 1,000 times, becomes heavy with commodities and the currencies, it's not what I usually trade because it's very volatile. And the dollar, just take a look at the dollar chart, the index chart. I mean, it'll explain right then and there. But it's way up here. I put a really aggressive buy in there at the end of the day today. I have to go to the weekly to show you where we're already at this inflection point. It's a tough buy. It really is, for me. But, I'll take a position, see what happens, and I'll have a tight stop. But that's a high. But look if we surpass that high, which then I'm real interested, right? I can't even find the last high. So let's go to the monthly. So you see what I mean? Now it's the horse out of the barn. Do I want to chase it and find out? The reason why I left the barn because it's burning. I'm stuck in the barn because I'm getting the saddle. I had no thanks. The last high was back at the recession, last recession. Another indicator things aren't looking good, folks. Another indicator things aren't looking good. Well, the good news is you'll be able to travel overseas because currency overseas will be cheaper. You can go to Mexico and your dollar will buy a lot of pesos. All right, keep an eye on that one too. So this is a little bit of abbreviated version. Like I say, it's the basement tapes. We're not a lot of whiz bang here, but the content's there, the process is there. Start adapting it, start using it. It'll prevent you from over trading, and it'll also prevent you from getting into something like we talked. I gave you that example today, the PSQ and the SH. I took a position, small one today. Even I've been short the 2Xs for a long time, so it's not something I'm that concerned about. But I want to say, hey, if I was listening to this, this guy said something, I'm going to jump in. So I'm going to be just like you. I'm going to see where it goes, right? Increase on a particular stock, entries, or you're in it, you want to know, you're underwater or above water. I can give you some insight on the next inflection points or where's a good entry exit point. Meme stocks I don't send them to me because I really don't know. Input in previous segments, topics you'd like covered. I'm getting a lot of ideas on topics from the beginners to somebody that, deep weed kind of stuff on yields and interest rates and bonds. So, we'll try to cover those as well. If you don't have a trading account, get one from, if you want to use Robinhood, that's fine. If you want to get, small account with Schwab or Fidelity or TD America, there's another very popular one out there. It's escaped my mind right now. You want to put 1,000 or a few bucks in there. Trading stocks now, everybody It used to be $5.95. Now it's $0. So you can trade. The only thing is you have to pay a small tax. You can get these stock charts, Fidelity, TD, Schwab, Street Smart Pro. Schwab is really good because it would marry what I'm doing, but I'm not. Doesn't matter. They all have the same things you can be set up with. If you got some questions about the stochastic or the MACD or the relative strength, how to get that set up, what time periods, or you don't understand it, shoot me an email to jim.netsearch@comcast.net. If you're comfortable, we'll get on the phone and we can kind of chat through it. Because I want to help you. This is, is it the basement tapes and you should discard it? No. This is just, I got years and years that I've traded. I've made a lot of mistakes. Am I always right? No. Could I be wrong? Yes. But the bottom line is we got to get a process and we're going to make money. And we're not jumping in every day because, there are times in a market where you just not a good time to trade. And we're kind of in that area right now. We don't know what to do. And look if you watch this one. This is the dollar is kind of let's not look at dollar. Let's look at the short of the SPY. The short of the SPY. We've talked about that. If you look here, the 15 EMA didn't cross over until back here, and that was April 14th. And it didn't cross, up here. It stayed negative for the short side of it for a while. So you go many months before you really get those inflection points. Can you trade in between those inflection points? Yeah. But, there are some rough patches. So there you go. That's today's report. Any questions, let me know. And until the next time, I'll try to get something out over the weekend. I'm James Twomey. This is the Twomey Stock Market Report. Hit the like button, please, if you like what you see. And then please refer it to your friends and family. Like to, get this information out to everybody that's interested in trading stocks. And if you're trading stocks or want to trade stocks, you want to make money. That's as difficult as it gets, and that's as simple as it gets. So let's get the process ingrained and figure out some stocks to make some money. All right. Till the next time. Thank you so much. Bye now.